Welcome back to another episode of the Scale Well podcast. Today I have one of my good childhood friends, Shaina Patel. She has been quickly climbing the ranks over at South State Bank. And, if you look at her LinkedIn profile, you can see she pretty much jumps every year. And in 3 or 4 years, she's already jumped from associate to sales portfolio associate. I'm super excited to have her on.
Awesome. Thank you. I'm so happy to be here, Sargis.
I know our audience is going to learn a lot from you today. We've been mainly focusing on real estate, but I know you can give us a different perspective as far as small business and how to scale business and how financing kind of comes into play. Just in your own words, walk us through your journey and how it's led you to where you are today.
Yeah. So I have actually been with South State since I graduated college. I've been there my entire career. I interned there the summer before my senior year. I actually didn't really think I'd go into commercial banking and didn't even want to go into banking in general. I wanted to be an auditor. I wanted to do what you did or what you do, just the CPA part of it. So I interned with them, absolutely loved it, had a great time. I got asked back to join the associate program for the summer after I graduated college. I was an associate, and then I've done various different roles. I've worked with our treasury department, I've worked in credit for a while, and now I'm a sales portfolio specialist, which essentially is a junior commercial banker. I can tell you a little bit about that. That's basically I help the anywhere between our lenders, sometimes our underwriters, and we kind of help with the prospecting side of it, talking to customers, finding out what they need, what tools and resources that we have that would be best suited for their business needs. So yeah, it's been great. It's awesome. I love the company I work for. I love the people I work for, and I can't believe I've been out of college for 4 years and working.
I know it flies by fast, but you might be the first person I've ever heard say that they wanted to be an auditor. I mean, being an auditor, if any auditors are listening, I'm sorry. It's like watching paint dry on the wall. But
That's what people have told me. I was like, okay, maybe we're gonna switch.
yeah, I guess that leads me to my next question. What kind of made you choose commercial banking? And was the end goal in mind always to be a sales portfolio specialist? Or is the end goal still somewhere out there? You didn't know you were going to go into banking. So has it been everything that you thought it would be, or has it been different?
Yeah. So I chose commercial banking mainly because whenever I interned with the bank, I absolutely loved everything. I loved kind of the numbers aspect of it. I loved connecting with people. When I was younger, I kind of knew I wanted to do something to help people in some way, in some form. And I feel like this is kind of the best way where I have my degree was in accounting and finance. So I think this is the best way I can kind of use my finance and accounting background from college to help people. It's been great watching people's stories unfold, them coming with a small business idea and seeing their business grow when they're doing sales of like $5+ million. So that's been great. End goal is to be a commercial banker. So I feel like the way we've thought about it, my bosses in leadership and I, is a sales portfolio specialist is just kind of a stepping stone to get there. It's been great. I've really enjoyed every aspect of it. It's been awesome. I've been able to see kind of all different parts of the bank just through the associate program, and then kind of being in this role, it gives me a chance to dip my foot into the RM customer facing side, or sorry, lender and customer facing side of things, as well as the underwriter kind of back house credit decision making. And then what was that last part of the question? Sorry.
If it was everything you thought it was going to be, or if it was different.
Yes, so it is kind of everything I thought, but also very different. So, first coming into it and just first entering my career and just the workforce, I really just thought all lenders kind of went out there was go and try to get loans and everything. But it is so much more. You're actually connecting with your customers. You're learning about not only them, but their families and kind of their aspirations. And they're not just coming to us saying, I need a $2 million loan. We're not just like, yes, perfect, done. Let's get that for you and get you out the door. It's more so, great, that's awesome. Let's see what else we can do for you. Let's see if what you're asking for is actually best suited, or can we do something better? Or is there another more specifically like tailored solution we can offer you that's not just cookie cutter? Because I've learned a lot of people don't really know what's out there and what's available to them. And a lot of people just kind of think, I need a loan. I'm going to go to a bank. I'm going to get a loan. That's all they can do for me. So it's been great. It's been a lot of fun. So yeah.
Yeah. When I first got into accounting, I thought kind of what you thought. I Well, no, you always wanted to help people, and I did too. But I didn't think that accounting would be a way to do that. Like I'm sure when you first started out, you were like banking, like don't bankers just sit in front of computers all day? But it's been the exact opposite. Like yeah, I sit in front of a computer, but I also get to talk to cool people like you all day and cool business owners and real estate investors who are really trying to get ahead in life. So I really do find meaning and purpose in that, and I'm sure you do too.
Mhm.
So with that being said, who would you say is your primary customer? Who are the people you love to work with?
Yeah, so I'd say a primary customer just be business owners anywhere. Right now, I'm targeting between $5 to $10 million. I'm just starting off, kind of building my book and my portfolio and everything. But anyone with any business needs or anyone looking to deepen their banking relationship, you don't have to have a ginormous need and be like, oh, I need $500,000 line of credit or this amount of loan. If you're just looking to explore different options, different banks, I'm always happy to have a conversation. I love who I work with. I love where I work, and a lot of our customers, I think, feel the same way. So yeah.
Do you do you find when people ask you for lending or any financing questions like that, are you kind of coaching them, or do most people already come in knowing what they need and what they want?
It's kind of a mix. I think it's more so on the coaching side of it. We try not to just be order takers, more so like solution providers. So it's a good mix. We do have a lot of customers that are very well versed and they know exactly what they need and they've just been around for a while. But we do also have some people that are just like, hey, I'm starting my business, or hey, this came up and I need X amount of cash. I don't really know what to do. So it's a good mix of both, but like to kind of coach people through the process more so.
Yeah, I couldn't agree with you more. I was on a call with a prospect today, and he said he opened up an S corp, and I was like,
Mhm.
"Why'd you do that?" And he goes, "Oh, I saw it somewhere on YouTube." And I'm like, and I'm sure you run into similar kind of conversations all the time where people are like, "Well, I heard I need a line of credit," and you're probably like, "Hey, slow down, hold your horses. We can maybe get you to there, but you might not really need something like that right now."
Yeah, exactly.
When it comes to financing, what are you evaluating to see what makes a business truly lendable from your point of view?
One thing, and this like goes back to I think when I first started at the bank, we learned about the five C's of credit, and that has just kind of been like in the back of my mind whenever talking to people. And so that's character, capacity, collateral, conditions, and capital. And what I don't think a lot of people realize is whenever you talk about character, yes, you're talking about a credit score, but you're also talking about who the person is and are they reliable? How do they treat their business partners? How do they treat the people they serve? And stuff like that. I think that kind of just throughout my career, I've been told that your character is just as important as your ability to repay the loan. And that's what capacity is, just kind of your ability to repay the loan. The collateral is, what we're taking, what we're lending against, whether it be a building or inventory or accounts receivable. Then your conditions would just be kind of like the economic factors and also your ability to repay and I'm sorry, how you're using the loan actually and the interest rates. And then I think capital is just the assets that the business has.
Yeah, that's interesting. I've never. First of all, thank you for the lesson over there because I didn't know what the five C's when you said it. But it's funny how there's obviously like a perception of bankers out there, but you guys are really you're probably doing interviews or at least seeing how they treat their fellow employees and suppliers and other business partners and things like that. So that's good to hear. I actually really love that. At the end of the day, this is a tax podcast, so I have to ask you some boring questions about taxes. Like what's like the biggest red flag you see on tax returns, or how important are taxes in being lendable?
Yes. So I can't speak immediately on biggest red flags. I think the biggest green flags, if that's okay, is anything that's CPA prepared or auditor reviewed. Those are great financials to have because, I mean, as you know, having them professionally done, you have someone that is certified and they know kind of what they're talking about, what they're doing. They do it for a living, so everything's organized and it just makes it easier for us to see the picture that your financials are painting. So the biggest thing for us is we want to get your financials and we want to be able to basically see your whole business mapped out through those numbers and just kind of get an idea of how you're making money, how you're spending money, what you're lending money for, and stuff like that. So it's really important. And then also that's a great way for us not to have to go back and forth and keep having conversations and keep having to ask questions. And then also as kind of a lender on that point of view, whenever you're getting those financials and you're seeing them, you don't want to have to go back and forth with your credit partners. You want to be able to kind of give them the financials and tell them the company's whole story, so it's easier for everyone to make a decision. And there's no, oh, I see, you reported X amount in income, but you're saying that you actually have this much money, or, we don't know where all these expenses are coming from. So it's easier for everyone all around to be able to see the full picture of your company and your business and how you're spending and making money.
Yeah, no, and I'm sure you've ran into some self-prepared returns where they're try to take an egregious amount of like meal expense or something crazy like that.
Yeah. Yeah.
Yeah, and like I feel like what a lot of people don't understand is what may be good for saving money on taxes may not be good for getting a line of credit or getting a loan because the bank really does want to see that you've been making money. Whereas obviously for tax purposes, people are trying to search for loopholes and how to legally mitigate some of those taxes due. But that's why it's good to always get both.
Yeah.
That's why it's good to have a whole financial team. If you're a small business owner who's listening to this, or even a real estate investor, or even just someone who's a W-2 person and they're wanting to get crack into this world, talk to a CPA, talk to a banker, talk to a financial planner. You really need a good team around you because what might be good for one might not be good for the other. So it's really kind of this tug of war.
That you just made about kind of you want to take as many deductions as legally as possible. It is kind of hard. I know we have run into a couple times where someone brings us their tax returns and the income that they've reported on their tax return might be a lot lower just because they have taken some write-offs and stuff like that. So it is important when you are going to have a conversation that you need to realize that we look at your tax return. We're not just because your tax return has this number, but you're saying something else or another financial document is saying something else, we have to go by what you're reporting. And I do know, everyone loves to take those deductions and everything, but you just gotta remember at the end of the day, your CPA, they know what they're doing, they know what's best for you, and they're there to help you.
Yeah, no, exactly. I feel like every day I hop onto Instagram, I see someone trying to say like there's this new loophole if you buy a Lamborghini at the end of the year, it's a deduction. But please don't listen to those people. Go to your local friendly no, neighborhood CPA. Yeah, it's just crazy out here. But I'm actually currently working with a client who she really wants to get into owning her first home, and she's trying to take these write offs at the same time. And I ended up hopping on a three-way call with her and the lender she's trying to work with, and we're kind of telling her, hey, you're gonna have to pay some money into the system, pay more in taxes, but the trade-off is you're going to get a home. Just to reiterate, you really do need a good team in place. That being said, going back to kind of small business point of view, at what stage should a business really be thinking about working capital, line of credit, things like that? Because I know you said you are primarily focused on the $5 to $10 million range.
Yeah.
But at what point do you think it makes sense to start having these conversations?
I honestly think right away. I think it's really important to have a line of credit in place before you even need one, honestly. I think it's just like a credit card for a business, how I kind of like to think of it. So before you have those, something could come up and you need like $25,000 in cash. And so instead of waiting to the last minute and then having to wait maybe like a month to be able to get this line of credit in place, you have it. And the best thing about lines of credits is if you don't draw on it, you're not paying for it. You kind of have that as a security. So I think it's just as early as possible. If you have the capacity to establish one, I would. And that's also a great way to establish a relationship with the bank, is just going in and starting something before you have a need to draw on it, honestly.
Yeah, and I think, and that's a great point. I definitely think there's a difference between analysis of paralysis, people thinking about every single situation that could possibly happen before they start their business, versus starting to educate themselves on things that really do matter, things like financing. Because at the end of the day, all businesses is just accounts receivable and accounts payable. Pretty much all you're trying to do is collect super fast and delay as much as possible. That's why I think it's really important to think about that from the jump, because while you're operating a maybe $5,000 or $10,000 a month business, it's probably easier to cover. You can pull from your savings account, but hopefully the listeners of this podcast are scaling their businesses pretty fast, and they're going to get to that $1 million range, that $5 million, $10 million range. They're going to need these lines of credit. So by the time you need it, if you haven't had the conversation yet, it's already too late. How has the higher interest rate environment changed how banks lend overall?
Yeah, so with that, it's more so consumers, they're not really willing to borrow at this high of a rate if they don't need to. And that makes sense. It's kind of harder to justify establishing a line of credit, maybe just with a higher rate if you don't need it. But then again, if you don't draw on it, you're not paying for it in a sense. But it's just been kind of harder to kind of get people wanting to take on more debt. So it's just, I feel like what I've seen at work is just we're just trying to shift our focus on how we can grow and how we can maintain those same relationships and make sure people are comfortable with coming to us and taking on more debt. But yeah, it's super volatile. A lot of people think that they can time the market and they know what's going to happen, but no one knows what's going to happen. So it's just kind of changed the way we've focused on growth.
If someone's looking to get financing in the next year to year and a half, what kind of conversations should they start having with their banker, with their lender? What kind of documents do they start needing to get prepared?
Yeah, so if you're looking for financing in the next 12 to 18 months, I would first and foremost, I would get with your CPA, your financial advisor, and kind of talk to them and look at what you can handle and what kind of debt you can handle. That is something that a banker would obviously help you with as well, but it's great to kind of get that background before coming, into a conversation. We like the most recent and up-to-date financials that you can provide, personal financial statement, tax returns, all that stuff. So just getting everything organized. And if you think, hey, in a year from now, I think I'm going to be needing to open up a line of credit, then I would start working with a CPA and also just establishing a relationship with the banker. Even if you don't have a need right away, it's great to have those conversations because on my side of things, we really do value a relationship and the length of a relationship that we have with the customer.
Yeah, do you find that maybe some people are kind of scared to start having these conversations early? Like, what does a potential client think that matters that it actually doesn't matter? That kind of scares them away from talking to people like yourself.
Yeah, so I think one thing that people think that matters is if you don't have that need right away. Like, I think people think they need to come have a conversation when they have a need, when the need arises. I think that doesn't matter as much. I think you need to come and have a conversation just way before you even think anything. Honestly, when everything's going well, I think that's when you should be having those conversations because then it's not as a rush and it's not as the 11th hour, we've got to get this done, and you're not as stressed out. And in turn, you're not really stressing out your partners, whether it be your lender, your advisor, your CPA. So just you don't need to have a need when you have those conversations. And I think a lot of people think that they need to come to the bank asking for a service or asking for something.
Just to piggyback on that, a good CPA, a good banker, a good salesperson in general is not going to try to sell you something that you don't really need.
Hmm.
If someone's really a sleazebag, they are going to try to do that, and maybe you should run away from that person. But if someone's just genuinely trying to find out if you guys are a match for each other, if there is something down the line that you guys could work on together, or if maybe you just need some more education right now, that's the kind of person you should be working with. People are scared just because the stereotype of people in the financial services industry. We tend to be salespeople. People are wary of that, but reach out to genuine people like me and Shayna, and you won't really have that problem.
Yeah, exactly.
But yeah, we're gonna go into some rapid fire questions right now. I have a couple for you.
Yeah.
What's the biggest mistake that you would say business owners make?
I would say one that I've run into a lot of business owners, especially small business owners, they will expense their business expenses through their personal credit cards. So I think it's really important to have a separate business credit card and a separate personal credit card because your business does get a credit score just like you get a credit score. So if you're putting all your expenses through your personal one, you're not going to really have that history of debt and repayments on your business. It's all just going to be on you. And as much as we would love to see you have a great credit score and great repayment history, most of the time we are lending to the business, not to you personally.
Yeah, 100%. Both from a lending perspective and a taxes perspective, do not put personal expenses on credit cards. That was great advice. What is one book that's really kind of influenced how you think?
Yeah, so there's this book called Extreme Ownership, and it's by two Navy SEALs, Jocko Willink and Leif Babin. I believe that's how you pronounce their names. And so it's honestly a really great story, and it's more so about failure and taking the blame for your failure and how you flip that in turn. And everyone says learn from your failure, but the way they wrote this book, I feel like it's really helped me realize, okay, if you fall down, you fall on your face, that's great, get back up. And it's kind of helped me realize, okay, yeah, you can feel bad you messed up or something didn't work out, but you don't need to sit there and dwell over it. What's in the past is in the past. It's important you learn from it and you take accountability so then you don't make those mistakes again, or you don't fail again, kind of thing.
Yeah, no, I like that. I feel like a lot of people take their failures personally. I know I fall victim to that from time to time,
Yeah.
but if you just pick yourself up and you move on, you realize it's not really personal. You're not a bad person. Maybe you just did something bad, or You're not an incompetent person. Maybe you just didn't, perform your best and work that day or that week. Yeah, so I definitely need to add that to my list.
Yeah.
What's the best piece of advice that you've ever received that you like to pass along to the audience?
Yeah, the best piece of advice is actually a quote, and it's by Harry Truman, and I actually wrote it down, so I'm gonna read it. It says, "It's amazing what you can accomplish if you don't care who gets the credit." And we were actually, I think I was told that when I was an intern or an associate by our leadership team, and it honestly, I didn't really think about it or didn't really resonate with me at first because I was like, okay, but who's walking around being like, oh, I want to make sure I'm doing this and I get the credit, but then you see it like a lot of people are like that, and maybe in the back of my mind sometimes I'm like, well, I did this, I want someone to know that I did this and did a good job. But it kind of has helped me shift my focus and a lot of people kind of around me into more of a results oriented kind of mindset versus I'm going to do this so people know I did this, and then that kind of makes you stray away from the end goal of everything. So I think that was just, I have a little plaque with that quote on it, and it sits on my desk. I just love that advice.
That's an amazing quote. That's an amazing quote because many people do want to do things by themselves.
Mm-hmm.
They get kind of that emotional high off of being the one that is responsible for everything. But when you're working in a team and you're trying to get somewhere bigger than yourself, you're trying to accomplish something bigger than yourself. You really can't be fishing for compliments. You do kind of just have to selflessly do it, and wherever the cards fall, that's where they fall.
Exactly.
But yeah, that was awesome. I've had a great time talking to you. This has just gone by in the blink of an eye, but I've learned a lot today. I really hope our audience has learned a lot, and I really hope you get a couple leads off this because you are obviously very knowledgeable. You're very passionate about the
Yeah.
people you work with. So, where can some of our audience members reach out to listen to you or to connect with you?
Yeah, I think reaching out, LinkedIn is probably the best way. It's just Shaina Patel. But yeah, it was great being here. This was awesome getting to kind of talk about some of the stuff I've learned.
Yeah, this is awesome. And that being said, if you're a business owner or real estate investor and you're looking for a new CPA, we're currently taking new clients on, so reach out to us. We're going to have our email and our phone number in the show notes. But yeah, thank you, Shayna.
Thank you, Sargis.